Are you bullish on Bitcoin towards the end of the year?
So Bitcoin fits in with this theme, and I want to equate, because I get a lot of outreach from people. So Bitcoin's been kind of stuck here for a period of time. Bitcoin is the purest AI trade, as AI goes through the complete disruption of all businesses, and the only moat that's left at the end of the day is a store of value that is in the digital economy. Gold will continue to have its strength, but at the same point, Bitcoin fits in. So whenever the AI trade reaches a profit-taking mode where retail gets hurt, I think everyone should expect it.
What's up, guys? Bang, bang. I'm obviously not Anthony Pompliano, but we are here with Jordi Visser. Anthony is away today, but we want to make sure we bring you the best content possible. And we know why you're here on Saturday anyways. It's for Jordi, not for Anthony. So Jordi, let's get right into it. Fed interest rate cut happened. What is the sentiment in the market, and where do we see it going?
Are you a Yankees fan?
I am.
Okay, so you know who Wally Pipp is?
I do.
All right, this is your big chance to replace your brother. So you got to make this really worthwhile. Okay, you're the Lou Gehrig of this show now. So you're sitting in the seat. I just want to make sure you realize you have this opportunity now. All right, Fed rate cut. The economic data is good. I don't think people are worried at this point about a rate cut in October. At this point, we're still above 80%. The rate cut happened. Everyone was positioned for it. All year, we've kind of had these events occur where retail, not the institutional side, because the institutional side is still fairly worried about AI. And there's been enough signs this week for people to be worried. Retail has been dominating the market this year, as we talked about last week with your brother and I. And I think there were signs, which I highlighted in the video last week, that all of the retail favorites, a lot of the meme stocks, crypto, everything had just a really rapid rise leading into the Fed rate cut. And so when you get an event like this, everyone was talking about sell the news. The market really hasn't fallen much. We've just had 3 days of weakness going into today. But I do think retail as a whole was a little euphoric going in. You saw a pullback. I don't think it has much to do with the Fed and getting through that. I think we started this week off with more AI fears from the institutional side. And I think they've kind of triggered the need for retail to look for the next catalyst. So that's all that's really gone on.
Bassett even said it was priced in 25 bips.
25 was priced in. But I do think people should take one thing into context as we go through this. Corrections are going to happen because the market is being driven by one investment theme. And until we start to see the PMIs broaden out, which I think will happen, as I've said repeatedly over the course of the next year, the S&P 500 is being driven by about 10% of the stocks. They're all related to the supply chain of AI. So whenever the AI theme, let's say, runs into profit-taking mode for a period of time, and retail's been all over the AI theme. They've been all over Palantir. They've been all over Nvidia, Micron, all of these names. Once you reach a point where profit-taking is just normal, I think you're going to see the entire space come down because there's really nothing positive for people to hang their hats on outside of AI at this point.
Got it. Are you bullish on Bitcoin towards the end of the year?
So Bitcoin fits in with this theme, and I want to equate, because I get a lot of outreach from people. So Bitcoin's been kind of stuck here for a period of time. I've said repeatedly that for me, Bitcoin is the purest AI trade, as AI goes through the complete disruption of all businesses, and the only moat that's left at the end of the day is a store of value that is in the digital economy. Gold will continue to have its strength, but at the same point, Bitcoin fits in. So whenever the AI trade reaches a profit-taking mode where retail gets hurt, I think everyone should expect Bitcoin to go down. It's not just Bitcoin, it's Solana, it's Ethereum. There's been a lot of speculation in the Bitcoin miners. I think we just reached a point where, again, we've sold off. The AI trade is still in the very early stages, despite all the fears that come out. So it makes sense for people, for Bitcoin to have corrections. And I just want to remind people, Nvidia is up over 1,000% since ChatGPT's launch. During that time period, which is less than 3 years, we're almost at the 3-year anniversary of ChatGPT's launch. You've had 5 corrections of 20% or more in Nvidia before it went back up to all-time highs. Bitcoin's going to be the same thing. So you can take Nvidia, you can take Bitcoin, you can kind of put them together as there. And I think people should start realizing that is the reality, is that we're in a situation right now where as Nvidia goes, as the AI trade goes, Bitcoin to some degree is going to be part of that as well.
How do you think about Nvidia and all these other AI companies and Bitcoin as well, but using traditional metrics? So obviously people generally try to value companies on a PE ratio basis and all these other things. Can you do that in the AI trades? Or is it too much? Is it a bubble? Like what are we doing and how do we evaluate these companies?
First of all, Nvidia and almost all semiconductors, in my opinion, are way too cheap based on where earnings will be 2-3 years from now. One of the hard things about valuing companies is the growth rate that you're going to see. What Nvidia proved to be up 1,000% and still have PEs being too cheap 3 years from now is that their earnings grew rapidly. And the only way your earnings grow that rapidly is to have exponential growth. Exponential growth is what is driving AI. So I think the problem is for people, it's really hard for the human brain to comprehend something that's never happened before in time. There's never been a $4 trillion company on its way to 10 trillion. There's never been the kind of growth that we've seen from a company because eventually the law of diminishing returns does kick in historically. That's not the case now. So I think this week in particular, we started getting the chatter that, oh, Nvidia is just like Cisco back in 1999 to 2000. This is not even close to the same thing, in my opinion, because of where AI is, which is still in the very, very early innings. We still have a demand greater than supply problem that is evident, and anyone can tell you that. But if the sell side street isn't doing it, if X isn't doing it, just go ask ChatGPT, what are the signs that would happen when the supply of GPUs is greater than the demand? You wouldn't be using VO3 for 8 seconds and then be cut off. ChatGPT wouldn't have a governor on deep research the way it does now relative to what it was 3 months ago. I could go on and on. There wouldn't be bottlenecks in high bandwidth memory in terms of microns reporting. Everything would be different. And this is all in front of humanoids. This is all in front of robo-taxis. This is all in front of the next stage of AI. So I just think for people that are going through this, remember, exponential growth, which is what we're seeing, means exponential changes in certain companies' businesses that are tied to AI. And if you don't want exponential growth or you want to fade something, go fade forward.
I love that. September is normally a down month. October is normally an up month for stocks. Do you see this trend continuing into October this year?
Well, so far this month, I think as of yesterday, even with Bitcoin being down where it was, I think it's still flattish for the month. Mm-hmm. I think stocks are up for the month. So I'm not sure September is going to finish down for the month. But I do think as we get through kind of the shutdown fears, which are now starting to percolate a little bit more, and for people who, you know, we haven't really been together on this this weekly during a real shutdown, there's got to be at least a 30-40% chance of a 1 week to longer shutdown in the government, just based on how polarized things are. A lot of times this thing gets solved right at the very end, so I wouldn't be surprised. But historically, it just doesn't matter for markets, but the fear factor's there. I think the more important event is happening at the end of October, and this is where I would expect that people are going to start to get more positive. The first thing is we still have the possibility of another Fed rate cut. The economy is fine. We just came out with a GDP of 3.8%, and now the GDP now is above 3.3, and that was before the personal spending numbers came out better than expected today. At the end of the month, Donald Trump will be headed out to the APEC summit. President Xi will be at the APEC summit. I believe that China and the U.S. are headed towards a deal, a structure that will allow them to be working together and not decoupling. I still think people believe decoupling is a possibility, and I think there's a chance here that a deal between China and the U.S. would get rid of hostility fears that are out there and kind of get people to resolve that maybe for the next few years of Donald Trump's presidency, China and the U.S. will coexist, as I've said, in mediation before divorce that'll happen at some point. But that just means the world can grow and we don't have to worry about kind of tail risks that would come through. I think that would be a trigger point in the next catalyst for the market as we go into the final couple months of the year.
Do you see that would settle a lot of the uncertainty in the market?
I think the uncertainty, as I went through in my weekly video last week, has been coming down. I mean, FactSet did a great job of just highlighting in the earnings calls from companies, which I think is a great way to measure this. The uncertainty for them on things like tariffs, the uncertainty for them on inflation. Those things have been coming down. And it's the rate of change. So we were at incredibly high levels in the second quarter. It's coming down, and they're also making money. For most of the consumer confidence levels, they're still very, very concerned. And I think that has a lot to do with the way the media has portrayed the fact that they're still, oh my God, they're coming. The tariffs, we haven't seen the impact yet. Everyone's going to be in trouble. Inflation's going to go higher. And at the same time, people are worried about their jobs. Mm-hmm. They're worried about their jobs, partly because of the tariffs, but mainly because of AI at this point. I think it's not going to resolve those two fears, but I do think for the marketplace, it will get rid of the fears that are in there from the company level. And every time that we see a second derivative or a rate of change in things like uncertainty, tariffs, inflation, things like that, it comes down. That's the other element that I think people have to start to be, you're always looking for the place where the smarter, sharper pencils on the hedge fund world are worried about. And people are still worried that the inflation data could tick higher. There's a lot of people calling this a policy mistake. My belief is that the labor market is going to remain on the weaker side, that we're going to have this problem that's going to be persistent for the next 12 months, even with PMIs going higher. I think the impact from AI is real, not necessarily in firing, but in this subdued labor market. And if you have a subdued labor market, you really need inflation to tick up dramatically based on what the Fed said. And if we don't see that, I think the mistake people are making is that rate cuts are coming more because of labor, less fears about inflation.
What do you see happening inside these organizations with AI and replacing some of their employees? Obviously, that's going to be a big driver of the economy going forward. But just having a more efficient, essentially machine that doesn't shut off and can do the work. How are these companies thinking about it, and what's happening inside these organizations?
I spend my life trying to crowdsource news and information that's happening real time. And over the course of the last 2 weeks, what has become more and more evident to me is this pressure that is happening from AI into jobs. You've had Zoom. You've had Fiverr. Now, for people who don't know what Fiverr is a company that outsources labor around the world, mainly with a technology bent to it. So if you wanted a coder, if you wanted someone to build a website for you, if you wanted to do something and you needed help to kind of deal with the coding or any of the technology, you'd call Fiverr, and Fiverr would supply very cheap labor. And it could be Pakistan, Vietnam, all around the globe. They just announced they're laying off people, and that the people that they want have to be using AI in a very efficient way. So when a cheap labor place is already saying that they need to reduce, Zoom is reducing. Bosch, a big company that's more on the industrial side, also said they're reducing. But it was this story I heard, and I don't remember what podcast it was, but they referenced Mercer. Mercer is a private company with a 22-year-old founder. Their ARR is now up to $500 million in a very short amount of time. So your brother and I have talked about stories like Replit, like Cursor, and how fast they've grown because of AI. Well, this is a company with a 22-year-old founder who's now thinking of raising money at a $10 billion valuation. And what they do, and everyone should spend time just understanding, because I'm not going to give it the completeness that it needs. But for everyone who's, read about hallucinations, what this company is doing is actually helping create specialized LLM models. So let's assume you're a legal firm and you want to have a model that understands all of the jargon and everything about law. Well, for it to get all that information and the nuances is very difficult. So you get hallucinations. It comes through. We've heard about some of the most famous hallucinations have come from the legal side. So what Mercer does is Mercer takes experts and they pay people $250,000. That lawyer or those lawyers come in, and what they do is they basically go in and do what's called reinforcement learning, human feedback. And they go through and they're providing details on certain problems on how they would handle it. So it's learning from the experts. So think of it as a company that is taking human expertise from experts. They're paying them a lot of money. So think of it as 1 year of them just doing this over and over again. That makes the model smarter and smarter. Okay, so how are they have such a big valuation? Who's paying them? Is it the legal firms? No, it's the hyperscalers. So their major clients are Meta, they're OpenAI. And as you go through this, you start realizing, oh my God, we're not only just going to have general LLMs the way we use them as chatbots. Every single vertical is going to have a vertical LLM. So think healthcare, think finance, think legal. This is what's coming. So when you read about Mercer, they're all about AI agents. And so to the point of, is the pressure happening internally? What's going to go on? The next 2 years are about the rise of AI agents in a very, very big way. It has already started. You're not going to see the numbers show up in OpenAI or Microsoft or any of these places. But what will happen is it will show up in cloud revenue. And so you're going to start to get this. This is why the demand for more capacity is there. AI agents take more inference. They take more thinking. It needs more capacity. So at a time when we don't have enough capacity for video generation, the AI agents are coming on the back of it. And this is something that, again, the total compensation of the world is somewhere between 50 and $60 trillion of employees. The total economy of the world is about 100 trillion. So 50 to 60 trillion of the $100 trillion economy is showing up in compensation, which means there's an incentive for these companies to find ways to reduce that compensation to get the productivity gains. We're entering that phase now. And that's why for everyone who's listening to AI's a bubble, OpenAI is buying from this and that, we're in the very, very early innings of this. And what people are writing about is honestly stuff that they can't possibly believe what they're saying.
Today's episode is brought to you by Figure. They're the largest non-bank mortgage lender in the United States with over $15 billion unlocked on their lending platform. They've just lowered rates on their Bitcoin and Ethereum-backed loans to 8.91%, improving their already industry-low fixed-rate 50% LTV loans. They keep building as well, being the only major CBL player to launch decentralized MPC custody to protect against single entry failure. And they just removed interest deferral fees entirely so you can let Bitcoin price appreciation pay for your loan over time. What is MPC decentralized custody? It's a Bitcoin or ETH on-chain wallet with multiple key shards to protect you from single entity custody failure. You can always see your crypto ownership in a segregated wallet and verify your collateral hasn't moved. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Visit their app or click my link below to take out a Bitcoin-backed loan with Figure today.
I agree. I know a lawyer here in New York, and they have said that internally they have their own LLM because they are not allowed to put any personal or sensitive information on outside LLMs. But it seems like every company is trying to do this. The CEO of Anthropic actually recently said that white collar jobs are more likely to be disrupted than anything else. Do you agree with that?
So for the near term, until we get into humanoids and robotaxis, yeah. And let me go. Dario Amodei, he talked about this, I think, last week in an Axios interview in Washington, D.C. He's talked about this for a while. One of the things and the reasons this is important is Sam Altman saying it, Dario Amodei saying it. The people that are directly related to the models, and trust me, guys, the models they've released are not the best models they have. So they already know where things stand in terms of the agentic world. They have information that we don't have. And so when they're all saying, and this is the crowdsourcing side, if the smartest people are saying you're going to see job reductions and the acceleration of AI is compounding at such a fast pace, which is what Dario Amodei specifically talked about in the Axios interview, we don't have enough capacity. So if a Bloomberg writer or a Wall Street Journal writer or someone on X says, see, this is it, this is just like Cisco, you literally have to look at yourself and go, how is that an intelligent response compared to listening to Dario Amodei and these guys? Yes, they have a vested interest in this. But so far, every single time, as I mentioned with Nvidia, that people doubt the compounding power of this, it shows up. And so again, if you just go into ChatGPT and say, what would be the signs that we've reached a point that the capacity has met demand, it will give you 7 reasons, none of which we've gotten to. So when you're talking about the law firms and you're talking about this and you're talking about Dario Amodei, I really do think rather than focus on firing people, I think the pressure and the fear factor that people will have on jobs is going to remain. And I think that's where the Fed is going to err. Because if you talk to me about where inflation is today and the compounding part of the jobs market, and there's one more thing that I didn't mention, and this is something anyone can bring up. September 9th, I believe, there was a letter sent to the Secretary of Labor. You can go find it online. If you just type in Secretary of Labor, letter from 40 economists. These economists were from a bunch of different places, think tanks, but also the major universities, but also included Ben Bernanke and Janet Yellen. And inside of this, it was saying to the Secretary of Labor, Is the government prepared for the impact of AI on the labor market going forward? Everyone should go read this. This is basically, in my opinion, really smart economists who have now done enough work. This includes Eric Brynjolfsson, who did the report out of Stanford, about what is coming in the next few years. To worry about transitory inflation from tariffs as opposed to the impact that AI is going to have on the job market over the course of the next 2 years. And that is before the robo-taxis hurt transportation jobs. That is before humanoids hurt the physical labor jobs and everything along those lines. I think people have to start paying attention that rates need to come down and that we're going to have this very uneven situation where you can have 3% growth, but you're not having labor creation. That hasn't happened before in the history of this country.
Can white collar jobs and just general people, can they do anything to stop this disruption, or is it's inevitable and you will be replaced?
No. Okay, so here's the good news. So for all the parents out there, and I'm a parent, and my youngest is a sophomore in college. You need to get your kids using and comfortable with AI. There is a job for everyone who's able to use AI. This is the major problem with the people going out there and saying it's a bubble. It actually gets people to not use it because they think they have time. Mm-hmm. You don't have time to catch up to this. If you use it every day in every aspect of your life, and that is really what it takes. I think I'm going to start spending time trying to help people with this through videos because I use it all day long. It is a phenomenal tool for learning anything that you want to learn. So if you're going to school and you're trying to be a specialist, bad decision. You need to be a generalist. You need to be an entrepreneur. You have to be able to build things. You have to be able to use AI to learn different things. It allows you to be a polymath and have all of these different skills, connect dots back to a story. It's one of the reasons that I've had such a good time in being able to do this, but also sharing this in this weekly is that I'm learning things every single day that I didn't know. I didn't know what an NPU was, and now I spend my time talking about it. Gas turbines, the shortage that have happened, asking the question, hey, if demand of AI is here and supply is here and we're accelerating at such a fast pace, what is the base case for electricity usage relative to what we thought 3 months ago since the hyperscalers have taken up their CapEx? By asking that question and then digging deeper and deeper and realizing that gas turbines cannot be built based on ChatGPT's analysis in time for the demand that's coming. Well, as an investor, that means you can go look in other places. Okay, what could replace a gas turbine? What will we need for electricity? So I think for people sitting at home, the more you use it, and I don't mean ChatGPT, I mean all of them. Mm-hmm. They're all free, the bottom service. Use all of them. Try different things. Cook with it. Look up things that you didn't understand. Do research on baseball players that maybe you didn't know. The more that you ask the question and get in the habit that you have the smartest person you've ever met there to answer questions across every domain, it makes you smarter just by being around them. And I think that's what people should be doing. And I think it'll help them prepare. The startup world is growing rapidly. I think your brother sees that. I think you see that. That is where the energy is. And that's where people that are below the age of 50 should be airing to, is if they work for a big company, those big companies are preventing you from actually keeping up. So if you do lose your job for any reason, go to Coursera, take a bunch of courses on how to get comfortable using LLMs at the same time they're using them, and then move off into another place and start building your own stuff, and then go out and look for a job and say, I know how to use AI. I've been using it for the last 6 months. You will blow people away with what you're able to do with it.
I've been shocked that I think this is the fastest change for technology in my lifetime. Like, things in AI are just moving so quickly. There's new models out all the time. And to your point of like keeping up and staying on top of it, it's almost like a full-time job sometimes.
It is. And again, I don't think of AI as technology. I really do view it as a person that is really, really smart. And can answer questions and have a conversation with me. And that's why I appreciate the fact of putting on my my AirPods and just walking around the park, having a conversation either on a topic that I wasn't planning to have a conversation, a topic I had been thinking about, or I bring up a thread for anyone who likes to hear podcasts that I've listened to. This morning I listened to the BG2 podcast, which came out with Jensen Huang. If you want to go listen to the person who knows the most about the future of AI rather than a Goldman Sachs or Morgan Stanley report, go listen to that. And once you listen to it for an hour and 40 minutes, you will have a better idea what's going on. But if you take that thread of the transcript and then you go walk around the park, now you have a conversation with it. You're going to learn more and more as you go through it.
This week, Nvidia invested $100 billion in OpenAI. I'm sure you've seen the meme. Nvidia gives OpenAI money, OpenAI gives Oracle money, and it's this $100 billion being spent over and over again. What are your thoughts on Nvidia investing $100 billion into OpenAI?
The day before it was announced, I listened to a podcast with Dylan Patel from Semi-Analysis on A16Z. Everyone can go listen to that one. He literally said on there, the question thrown to him was, what is Nvidia going to do with its cash? It's free cash. And he said, yeah, they have $300 billion. He literally said on the podcast, what they really should be doing is giving like that money to an OpenAI, because their biggest issue is going to be the fact that we don't have enough capacity. We need to build out the infrastructure. And so I think the problem is for people, they view it as kind of this, the big are getting bigger. They're forcing people out. There's this whole thing of, I'll take my revenues, give them to you, and then you'll give me revenues back. The reality is we're in a very concentrated world, and who's going to be able to grow the capacity? It's one of the reasons why I say when everyone talks about humanoids, don't bet against Elon Musk and his ability to scale. Nvidia has scaled. Semiconductor companies that are trying to compete with Nvidia, that only works if Nvidia isn't continually making new chips, which they're making new chips every year. Those chips are more efficient. He goes through that on the podcast. Now, again, there will always be times where these stocks fall. There'll always be times where people panic. But the reality is just because they invested $100 billion in trying to make sure that OpenAI has the ability of growing out the capacity necessary with the power, electricity, and the compute to be able to buy the chips that fund it. I get what people are kind of looking at here, but again, there's nothing to compare this to, in my opinion. And at the same time that Nvidia gave a bunch of money, Oracle raised $18 billion because their orders were so big that they need to raise money. And so there was a headline in Bloomberg yesterday saying tech companies are out there borrowing tons and tons of money. So the reality is people are going to be scared along this entire way because of the size of the numbers and the few players that are involved. I think it's time to go focus on the smaller companies that are going to benefit, because now we're getting into this PMI side because the numbers are so big that it actually matters to the economy on a very, very big scale.
That makes sense. CapEx seems to be something that all these tech companies are thinking about. Even Mark Zuckerberg, I think last week or this week said that they may misspend a couple $100 billion on AI just to get a little bit of market share. Do you think all of this CapEx is warranted, and how should companies and individuals kind of be thinking about spending all this money to basically like keep up with the race?
So let's separate two things, because number one, there will absolutely be some companies that should not have spent the amount of money. If you don't create the models that people use, just like any other business, has Ford spent money that they lost to Tesla? Yes. I mean, they tried to get in the EV race. They've tried to do this. Like, there will be companies that make a misallocation of resources. Let's separate that and just say, yes, there will be companies that don't win. And your job as an investor is to figure it out. Now, if the Mag 7 keep going higher, it doesn't matter if one of them goes down 30%, if the other 6 are going up 25%. If you believe in AI, I think you're going to be fine. Now, if you wanted confirmation of this, and this is kind of one of the things that I talked about this week with people, go to China. Now, let's separate the U.S. So if everyone believes the U.S. is a bubble and these companies are a bubble, then why is China spending equal amounts of money? And I say equal amounts because I want to make sure people hear this. Last year, China spent close to $1 trillion on the build out of clean energy. It contributed in terms of their growth rate, because of how much they did from the year before, about 10% of their GDP. This is really important for people to understand, is that in China, we talk about how they've been building out their power needs. Well, that's coming from the government side. On our side, we're having to do this at the private sector side. So the numbers have to be huge. Alibaba raised their CapEx this week. They talked about the fact that they need capacity to be 10 times where it is by 2030 for ASI. So Alibaba, And you can go read the story yourself. It's Eddie Wu talked about this. So if China believes the same thing, and when you listen to Jensen Huang, he goes, hey guys, this is actually about the capacity needed for the rebuilding of all computers in the world to be connected to AI. And I really want people to understand that, like, we've gone from the 1970s with the beginning of the PC revolution, the launch of it, and the PC, Time Person of the Year in 1982 being the personal computer, to where we are today. We now have to take all the infrastructure that was built on CPUs and we need to replace all of it with GPUs. It needs to be AI centric. All the PCs, all the phones. I just purchased my first phone, I think in 4 years, because I decided that there was enough AI intelligence on the Apple iPhone after reading all the reviews. It's not an AI device, an edge device at this point. But I do believe there's enough going on that I want to start using the beginning technology of AI. I realized this when I didn't get the iPhone at the very start, and I waited with the BlackBerry until it got further ahead. And it took me a while to get used to kind of using it and getting my brain ready on it. So I said, all right, I'm going to buy one. I'm going to pay I think it's cost me $1,800 for the phone, which is primarily the reason why I hadn't bought one in the past. But I think it's time now to be up. China's confirming. Jensen Huang said all devices have to have an AI brain in them. All cars do. All washing machines do. All autos or all humanoids do. Mm-hmm. That's a lot of brains. That's a lot of GPUs. That's a lot of capacity that's still to come. We are in the very, very early stages of this. We have not gotten through the first or second inning yet in kind of the progression. And so I think for everyone like paying attention that gets caught up in these things, there's a trading element, which is when things go too far, the doubts are always going to be there because of how concentrated it is and how much this looks legitimately like a bubble, because it does look like one. But that's where you go back and you listen to, okay, Jensen Huang says every country in the world needs to upgrade their infrastructure. Not every person, every country. This is literally something that's different, as he said on the podcast, than the atomic bomb. Not every country needs to have the atomic bomb. They depend on the US. They depend on some other ally to kind of have this technology in the event to protect them. If you want to be relevant in the world, you have to have AI edge devices. You have to have the capacity to have AI. So every country needs this. This is not a US-China thing, but those two countries are telling you how much supply is necessary and how much capacity is necessary. We don't have it right now.
Yeah, and I agree. And I think that a lot of developing countries, this is their opportunity, right? If they're like, hey, if we can be on the forefront of all this stuff, like we have that ability. But side note on Apple, I am embarrassed a little bit for Apple for being such a large company, being worth, $3-4 trillion and Siri being so bad.
I completely agree. I mean, the only thing I use it for is alarms and kind of timers when I'm cooking. Other than that, I still don't use it that much. I do use it for texting. I do use it for phone calls occasionally. But honestly, is that where we've come to? Is that's the best kind of tools? And it doesn't work all the time. So I use ChatGPT every single day for conversations. I use it for verbal learnings when I go on my walks. I use it to have conversations about books, about podcasts, until AI Siri gets there. But I do think it's important to get used to how these edge devices are going to work. And I'm not saying Apple's going to win in the end, because I think they have a very hard road without having their own LLM in the long term. But for the time being, to get used to how you can be more efficient even on your phone, I think it's important.
Yeah.
This episode is brought to you by BitLayer. BitLayer is taking Bitcoin beyond just a store of value. For the first time, you can put your Bitcoin to work, earning yield while staying true to its core principles of security and decentralization. BitLayer is making Bitcoin DeFi a reality. Learn more at x.com/BitLayerLabs. Again, that's x.com/BitLayerLabs.
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise and the space changes so quickly. That's why, every week, I write a 5-minute memo on the biggest stories impacting crypto, in plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
That makes sense. Google recently invested $3 billion in Cypher mining. What's your reaction to that?
Well, this continues the path that we've seen. I mean, I think, let me put it this way. If we take the merging between AI and Bitcoin mining, this has been a big year for it. First of all, the whole CoreWeave thing, when it came out, kind of got a little bit of enthusiasm. It was followed up by Circle in terms of the stablecoin side. But I think over the course of the last 6 weeks, we finally got the traditional finance people looking at the relationship between all electricity, all power, and kind of where the Bitcoin miners fit into this and this linkage between this. I do want to say this again and again and again. The world is built on code. If there's one thing that Jensen Huang did say that gets back to your emerging market side, which I think is important into the Bitcoin miner, the whole relationship and how these guys are looking for any capacity they can find. Jensen Huang said, this is the ability for kind of taking companies that had a huge advantage and allowing any person in the world to have the same superpower. And that superpower is to turn an idea into an application that can make money. So any child who can speak the English language and come up with an idea can speak into a phone and have an app built. They can connect Stripe to it and they can start collecting revenue on it if it's a good idea. They have to figure ways to promote it. All of this stuff can now be done because coding has become ubiquitous. And I think that gets important to Bitcoin miners, the relationship with AI. It's all code. At the end of the day, we're merging the digital economy. And this is the reason why I started to go with, there's the macro world, there's the AI world, which is basically dominating the macro world through GDP, through labor, through everything. And then you've got Bitcoin over here, which is the eventuality. And the eventuality is AI is going to disrupt everything in the traditional finance world slowly, but continuously. Is there anyone who doesn't believe, forget the views on Elon Musk. Is there anyone who believes that a car company like Ford, GM, or any of them can compete with Tesla if their full self-driving works, the scale that he's built, the fact that he already has massive battery production, he's got humanoids behind it. Think about what he's been able to create, and he has his own LLM in terms of XAI. How can a car company compete with that in the event that he makes the inevitable progress? So if you think about an old traditional Ford, which is really the beginning of the Industrial Revolution in many ways, compared to where we are in AI, and take Tesla and view it, and I said this on my most recent video, it is not a car company. It is an AI company. Mm-hmm. And if people don't see that disruption that happens from Elon Musk and his vision that he put out 20 years ago in terms of what it meant to sell the first car, the Roadster, then turn it into more affordable cars, have those cars be collecting data with the eyeballs or the cameras, get those cameras into the AI thing. He built XAI in 2 years. I just think we're in a world where when people get through it, they realize Bitcoin is a moat where people believe in it as investment. And the more that AI is accelerating, eventually it will cannibalize the entire kind of fiat system, of which the Mag 7 are part of the fiat system.
Mm-hmm. GDP for Q2 was revised to 3.8%. That's obviously much higher than the expected 3.3%. Are we going to continue to see this economic boom? Obviously, you seem very bullish on the AI. And then do the expectations get revised moving forward to kind of match what is now expected given AI's advancement?
All right. So first of all, before people get all, and if your brother is here, he'd be doing this too, so I got to kind of woe things back a little bit. Most of the Q2 surprise is the fact that Q1 was a negative number. So the tariffs had a lot of front loading of imports and then no imports needed after. So you end up with a situation where if you have a ton of imports as a country and no exports, your GDP goes down. Then in the second quarter, when you don't import anything, okay, great. So now you've exported a ton. And so trade ends up being this back and forth. If you take the first 2 quarters, we're under 2% for the first half of the year. Not a great number. Don't care. Consumption is still 70% of the economy. We don't have labor growth right now. So we do have 4.5% still, or 4 to 4.5% wage growth, which is great. We have extreme high net worth across the US in terms of the net worth of people's assets. So the spending will be fine. But if labor's not good, I don't think the economy can possibly run away with things. So I'm a little bit more, I don't want to say skeptical. I just think people should be believing that nominal GDP is going to remain in the 4.5% to 5% range. Now, for the last quarter, again, it came out at 6, but in the first quarter, it came out to average in that same range I had. Inflation could bounce around. And if inflation ticks higher for a quarter, and I'll give you the reasons why, because I do think that we're going to have more volatile inflation than we are more volatile GDP, you will get falls back to 1% GDP. And with no labor growth, people will see a recession's coming. Then we'll have an acceleration back the other direction when inflation comes back down, and we'll get closer to 3. I think in the end, we're going to stay around the 2 to 2.5% level of real GDP, which is just nominal GDP less inflation. The reason I say inflation is going to be a little bit more volatile is because of the PMIs. So I want to make sure I again make this clear, and I've had to explain PMIs before. PMIs stand for the Purchasing Manufacturing Index. It's a business cycle thing that gets with the manufacturing side of the economy. So when you have software booming, you don't need a tremendous amount of manufacturing. When you have consumption being really good, the manufacturing shows up for the things that people are buying. So we really haven't had a PMI cycle that's had durability based on commodity needs, and we haven't had one where oil prices have kind of tracked higher. I think that is what is going to be the case over the next year. So if I'm wrong about something and we're sitting here a year from now and Anthony goes, well, we were wrong from last year, the thing that I would be willing, that I'm going to say, we don't have enough power or compute for the capacity of AI. The compute side, we're going to make the chips, that'll help the PMIs, and that's going to start to spread because we're going to start to get demand for new phones. We're going to get new autos. Because again, we're going to have AI in these. So there's going to be an upgrade cycle. We haven't seen an upgrade cycle for this in a long, long time. But you're going to want to have AI in your car, and you're going to want to have autonomous driving. You're going to want to have AI in your phone. And so we're going to have an upgrade cycle. That's good for manufacturing. At the same time, we have to build out the data centers, and we have to build out some solution to the fact that we have a shortage of gas turbines. So I feel very, very comfortable, despite people not believing it, that over the course of a year, and it will take a year because to turn on the engines and to get this whole thing moving, it's not something that's overnight. Manufacturing takes more time. You need to actually see the demand come in. That's why I do the videos, to just highlight people the leading indicators. I think we're going to get it, but I think people should realize that what comes with higher PMIs historically, and I think it'll be the same case, is higher energy prices. The weakness of technology is you need more power to get more power in the technology. And so I think oil prices are going to surprise on the higher side. I don't think we're going to see an oil spike because this is not, it's more natural gas, it's more batteries, it's more solar, it's more this. But underneath it, through generators and through PMIs going higher, I do think you're going to see oil track higher. Gas at the pump has been around 320 for most of this year after falling. If gas at the pump was at 4 right now, we'd be seeing headline inflation at 4%. At 4% inflation, GDP with a 4.5% to 5% nominal is close to 0. So that's what people, I think, have to get used to. I think next year will be about another year where AI dominates, power is involved. And to hedge out that risk and to be involved, I think with your AI trades, you need to have energy stocks, energy stocks, energy stocks.
What should investors be looking at in terms of metrics or indicators kind of for future growth? Should it be GDP, inflation? Should it be something more specific of construction of data centers, right? Like, how should investors be looking, and like what indicators should they be looking at to hopefully, everyone's playing this game of predict the future?
Given how stable nominal GDP has been, there are two variables that I'm going to go the other direction on. So nominal GDP, again, has been 4.5% to 5% since we settled down after COVID. Until that changes, I don't think it matters. Now, wages are growing at the same level. Here's what I would focus on. Number one, if you start seeing oil break above $70, I think you need to start preparing for some risks that are happening, that the next recession risk could pop in because, again, inflation could go higher. Number two, if the labor market does something I don't think it's going to do, if all of a sudden jobless claims start going higher, which has not happened yet, that means we're going from a hiring problem to a firing problem. If we start getting into a firing problem, That's a little bit different. And then you could start to see consumption fall off. I don't think either of those scenarios are likely. As much as I think AI is pressuring jobs and will, I want to make sure people realize I do not think in any way, shape, or form over the next 5 years, the amount of people working in the economy will change dramatically. So if we don't have immigration, the population, because we've got more people leaving the labor force than entering it every year right now, it's about 300,000. I just think the amount of people that are employed is going to be around the same level in 5 years, which means we're not going to have too much hiring. We're not going to have too much firing. We'll just have the demographic roll off. Mm-hmm. And so even though I think AI will hurt people, there's still endless amounts of jobs that people could take in the gig economy and stuff like that. It's not going to be the jobs they want, which is why I keep telling people, if you're worried about your job right now and you think it's going to happen at some point, before that day occurs, in your spare time, start preparing by using AI and just start with a simple question. Here's what I'm good at. I want you to figure out what I can do over the course of the next month, learning from you regularly. Can you put together a program for me on learning about how to prepare this specialty into the AI world? Where can I do this? And I think you have to start with the simple question of taking the skills you've already identified, because everyone who's worked in any business, I don't care the job, they have some skills. The question is, can they become a consultant and can they outsource this using AI where they have 5 clients as opposed to 1? If a business can hire you and you can do 5 times the work because you figured out how to do the same work in the back office, in wherever, but now you have 5 clients paying you 1/5 of what you were making, then you're making the same money, but you're working at home and you don't have to deal with worrying about it. And then you're not as sensitive. If you lose one job, okay, great. You lost 20% pay, go fill that job. So I think that's the way people have to think about is this consulting side of using AI and then going in and saying, hey, I can replace the job that I had at your firm. They got rid of me. I went off and did AI. It's a very good story. And it's much better, I think, for people to try that than to sit there and just wait for it to happen.
Yeah, that makes a lot of sense. We recently saw the U.S. government invest in private companies. We saw it with Intel, and I think we saw it with a lithium company this week as well. What are your thoughts around the public getting involved in these private businesses, and specifically the AI businesses and like the infrastructure side of AI?
All right. Number one, as you're reading stories about AI bubble and how can this thing is going to end a certain way, the government has put money into MP Materials. That's a rare earth company. We don't have enough rare earth. We need rare earth and AI we need rare earth for AI. We need AI for the military and for everything going on in our race against China. So that's the first thing that says maybe there's not an AI bubble because the government's out there who has all of the AI people coming in saying we need to build our own rare earth processing side here. Number 2, they make a big investment in Intel. Okay. We've got a problem here where Taiwan Semi controls most of the world's semiconductors, and in particular, the ones that we need as a fab. We need to have fabs built here. Well, first, we'll try to get Taiwan Semi to build one here. Great. But now we can't let Intel go under because that's our one big fab company here. So let's get Nvidia to invest in there. Let's get the government. So number 2, the compute. So rare earth compute. And then with lithium, it's very simple. We need batteries for all military devices, all edge devices. So when I mentioned NPUs need batteries, meaning neural processing units, the brain with inside machines, the brains with inside any kind of hardware that we're going to use, whether it's a phone or whether it's a computer or a drone or a humanoid or a car. We need to have battery technology in there as well. So by them making an investment there, think about where it is as opposed to going through this. Is there really an AI bubble, or is this the early innings when the government is going, we need more compute, we'll go into Intel. We need rare earths, we'll go into MP Materials, and we need more battery technology. And I mentioned last week, China just made a huge investment in more battery technology. And as I said earlier, they spent $1 trillion. So Microsoft, Oracle, all these companies are the ones spending money on nuclear plants and all this stuff. In China, they don't do that. They just go, here, guys, here's $1 trillion. We need tons of solar. We need tons of batteries. The U.S. government is starting to do things that, again, are nudging the private sector to put more investment in by sending a signal that we need more of this. So for investors out there, retail traders that are looking, again, we're going to be in a little bit of a mode here where people are worried about AI because of what happened this week. The reality is the government's sending the same signal as Jensen Huang is, which is we don't have enough capacity. We're in a race for national security. This is a global thing. It's not just us. It's every country in the world that wants us to race on this. They're going to help fund this. We need to get moving on it.
That makes sense. Let's end on this. What models and tools are you using now to evaluate everything that's going on? Obviously, you mentioned ChatGPT and Perplexity and some of the other tools. Are there specific ones that you like or that you are using that maybe you think are a little bit under the radar and not as many people are taking advantage of them?
I wouldn't say under the radar. Here's what I would say. You mentioned Perplexity. You mentioned ChatGPT. I also use Claude. I also use Grok. I also use Gemini. Grok is more specific for me at this point on sentiment and kind of the ex-posts when I'm looking at stocks. But I think since a lot of the people that are watching this have taken control of their finances, I will just give an example that I kind of already referenced here. If everyone takes the time to listen to the BG2 podcast, it's an hour and 40 minutes. Before you listen to it, go into ChatGPT, go to YouTube, go to the video. So if you type in BG2 pod, it'll come up, and then click on the one with Jensen Huang. In the upper right-hand corner, there'll be a transcript button. If not, just go into the more category below, find the transcript. Normally for these videos, there's a button you press. Looks like ChatGPT. And when you press it, it takes the transcript, it puts it into ChatGPT. So if you do that, it will summarize it for you. Once you've summarized it, go listen. The reason I want you to summarize it first is I want you to have it in a chat context window. Go for a walk, listen to the entire podcast, or listen to it while you're still on your computer. When you get to a point that you don't understand something he said, pause it, go into the chat window, and then in that context window, type in, he mentioned, and I can't remember, I'm not going to come up with something right now, but he mentioned XYZ. Mm-hmm. Can you give me details on that, please? Once it starts to give up details, your job is now to go into a rabbit hole to learn more and more about it. And eventually you get through asking questions to it, just like you were with a professor. Mm-hmm. But at the very end, what I want you to do is go, okay, give me a list of 5 companies that should benefit from this other than Nvidia. When those 5 companies show up in your chat context window, go to Perplexity and then go into Perplexity, which is the one I use to look for earnings commentary, and say, in the most recent earnings commentary, did this company mention AI demand and how they're benefiting from it? If it was something related to assisted driving or edge computing, ask it, did they mention in their earnings call that they're already seeing demand from edge computing? Mention Oracle had huge capacity issues. Does this company benefit in there? Once you've done that, then you can ask it, okay, how's the stock been trading? Is this a PI sensitive name? You start building out a theme on that the same way a sell side analyst would. Now you have an idea that you can monitor and you can make your own decision on. This is the way that I find trading ideas. I take a theme from a podcast that maybe I haven't heard before, something that Jensen said is coming now. I go cross-reference it with a bunch of different places. I go, look, one other example, just so people have something they can do at home. Teradyne is a stock that I've heard of, never really got involved with them ever. I was going through the semiconductor index this week, and I went into Perplexity and say, hey, give me a semiconductor that had a big jump this week. I like to find names that are up in a week that the market's down. So I go in and Teradyne came up, and I go look, and I saw it was up more than 10% on Monday. So I go look, I asked Perplexity, why was this stock up so much on Monday? It got an upgrade from Susquehanna. They took it with a price target, taking it from 130 to 200. I went, ooh, that's a big price target change. What specifically did they talk about? And you start to see what this analyst, you're just cherry picking off an event. And if the analyst upgrades it and the stock doesn't jump, it's not going to show up. So what you're getting, and this is the thing that I believe has happened time and time again. If a stock jumps 10% and the analyst has just raised something on it, the question is, it didn't just report earnings. Why is the stock gapping higher 10% purely from an earnings upgrade? But then as you start to realize it, I start to see, oh my gosh, clearly demand is out above supply at this point. So there must be people trying to accumulate a position at this point. Let me go see if there's a theme here. And there was a theme here. And I can safely say now that I'm going to use it in my video this week. So just 2 examples for the people trading at home the more time that you don't spend doing this type of stuff, listening to podcasts, coming up with an idea, going to the transcript, having a conversation, and then going to the LLMs, that is the way I use it every single day. And I'm just telling you, this is a great way of having a normalizing effect. And most hedge funds are still reading the research reports that they get from the analysts. That is not the way, in my opinion, to deal in the modern world.
Awesome. All right. Thanks, Jordi, for doing this. Really appreciate it.
All right, Wally.